Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, July 26, 2023. Fed did what everybody thought they were going to do, raised by a quarter point. They're kind of hinting that they're going to continue to raise, and you're still hearing people saying that they're done. It's kind of crazy, but anyway, it was a it was a nothing day. The Dow was up, just basically because of Boeing, I believe it was. They lifted basically the Dow by themselves. And then you have the Nasdaq that was down. They were down pretty good, and we actually had the S&P that was down 20. But then really the last 30 minutes of trading, we came down to the moving average. So we still have our retail traders that anytime we get near the 200-day moving average on the 15-minute chart, they're jumping in. So these drops are getting less and less. And what's going to happen is this is going to roll over. These are just your retail traders, the ones that believe that the boat is leaving and they need to jump on. So once we take out this level here, let's just say this one right here, still think 45.27 is important. If they do, we have the support at 4,500, but most likely we're coming down to the 44.50. That's going to be really the major support. On the resistance end, we could see it right here. Every time the bulls get up here, we have sellers coming in, so we're really caught within this range. I'm hard pressed to say that this is a bearish pattern because if anything, we kind of have it has a look and feel of an ascending triangle. And you can see if I just draw this trend line, this is where buyers are stepping in. So I don't believe that this starts from here because that makes it actually a fairly decent sized move. And it's more just coming up here and hitting the trend line and popping up. So if this is the case, we'd be looking at a move. If it breaks to the upside, it would be another 50 points, brings us into the 4,600. I still believe nosebleed areas, but these bulls can stay at the all-you-can-eat bar all long. And the thing is that once every bear is out of this market, they're going to get full, and there's not going to be a buyer around, and this is going to drop really, really fast. So that's really that. There's not a whole lot to do it. The first line, really, that the bears need to get through 45.26. If they do that, we're coming down to the 4,500. But I believe after that, that's when we start coming down to the 44.50. On the upside, if the bulls, if they can turn around and break things above it, then this is really the what I was talking about with the target zone, and that is simply the resistance area from here. So there's going to be sellers if it gets up there and you have cash. I actually have zero issues getting very, very aggressive up here because the next move should bring us down to the 43.80 target number one, more likely down to the 4,300 and really down to the 41.65. So bearish divergences are in place on the daily, bearish divergences on the hourly chart, and bearish divergences on the 15. So the bulls are definitely have the momentum, but the indicators and the sell signals are telling me that they're going to have some issues keeping things going. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.